Hey, John, we just had an election and now we have results. It will impact your taxes and other areas of personal finance. How? We've got our predictions here on Friends Talk Financial Planning. I'm Bridget Sullivan-Ramel, and I've got a family financial planning practice in Chicago, Illinois.
And I'm John Shearer. I've got a fee-only financial planning practice in Middleton, Wisconsin. And before we talk about what to do about the election with your personal finances, I want to remind everybody to hit that subscribe button. That helps other people find this information on YouTube. And with that, I'm so glad that you reminded me there was an election. I'd kind of forgot about that, Bridget, right?
Yeah,
Maybe I was trying to forget about it. I know that
yeah,
we're pretty glad
right.
not to have the political ads one after another here in Wisconsin anymore.
Yeah,
But
I
right,
know.
so now we've got a little bit of clarity on what's going on. We don't know the results of the House quite yet as we look at this, but Republicans in control of the White House and the Senate. And there's some impacts. We're starting to hear from people talking about, all right, what do we do now
Right.
about that, right? We talked in a previous episode about what we think about the economy and what about the stock market, but there's a
Right.
lot of other things. We can't control the economy or the stock market. We
Right.
can control a lot of things. What are you telling folks about what they should be doing now or what they should be thinking about?
Well, let's just talk. I want to start with taxes, okay? And let's talk about the things that the Republicans have said they like and that we know from the last go round that they like. With the tax conversations, it's important to understand that there's legislation, the current tax regime that was passed under the last Trump administration expires in 2025. So 2025, we're all set with what we had before, but they're going to be wrangling about what's happening in 2025 and 2026 and beyond. Sometimes it takes multiple years also. So it might, like, they might start in 2025 or start in 2026, but they're going to be positioning, et cetera, soon. And they kind of have to pass something. And that was the same, whoever got elected. They've got to pass something. They're going to pass something. So that means they're going to make some changes, right? And since Republicans are going to have a lot of influence, we can talk about what they like and what they might do. Okay, so the first thing.
Well, let me jump in there. You said that they're going to do something. I'm not so sure that I agree with that they're going to do something. They could choose to do nothing, right?
They could, and then it would go back to the 2015, 2016 rules.
Right. So one possible option, I'm not sure I think that that's what's going to be likely or not, but one thing they could say is, listen, we kind of think we need to raise revenues. We need to raise taxes in some fashion, but rather than passing a tax law that says I raise taxes, now I got to go defend that next time I run for election. I can say, you know what? Those folks in 2017, they did this stuff. We didn't, we haven't done anything. Right. So I think that's one of the choices. Maybe they do nothing. I'm not sure how likely I think that is, but it's off the table.
And another thing is patchwork. Like, what are our favorites? Let's cherry pick a few things and do those.
Yeah, right.
So that's possibility, and that's actually a lot more likely than doing nothing.
Yeah.
So there's, some of those favorite things that everybody can agree on, right? So let's say they're going to do something. The first thing I want to talk about is not taxing Social Security. Okay, I think that's an intriguing idea. Right now, what I think a lot of voters don't understand, though, is that Social Security is only taxed if you're making some other income.
Right.
So if you are 40% of the people, I just looked this up, 40% of the people receiving Social Security, that's all they're living on. Okay.
Yeah.
So, and you would need to get another 20-ish, maybe 30 to start getting taxed in addition to Social Security. So if I were to guess, I would say that 60% of the people that get Social Security do not pay any tax on it.
Okay? Yeah.
So I agree with so that
let me just grab that, because that's really, I don't want to skip over that. Like, that's powerful. 40% of people that are receiving Social Security, that's their sole source of retirement income. Right. Maybe a little bit of interest these days that they got a little bit of money in a checking account sort of thing, right? But they're living on Social Security, and that is not based on the tax laws. That's tax-free by definition.
Yeah, exactly.
And then you need to have another 20 or 30, or there's some right before even half of it becomes taxable, right? It's not all taxable. even before half becomes taxable. And I don't disagree with your, like, some bigger number, 50, 60, but a lot of people, let's
Not.
generally call it half, aren't paying taxes anyway on
I
Social
would say
Security,
it's at least half,
right?
yeah,
That's
yeah.
really powerful. And I don't think I hadn't thought about that. I kind of knew those ideas, right? I knew the tax side, but I hadn't thought about it until you just said it, that, okay, yeah, that sounds wonderful. Save, no tax on Social Security. Half the people are probably not paying any anyway.
Right.
That's really significant.
The other thing is that the people who are paying money on are paying tax on Social Security are making a little bit of money.
Right.
So we get into, right now we have a progressive tax system, right? So the people who are making more pay more. People who have more pay more, and the people who have less pay less, but maybe a higher percentage of their total income they pay in taxes, but they pay less in certain situations. Okay, so
Right. Right.
I'm not going to get into that. Okay, so let's talk. So just so we are talking about it, that's who this would be benefiting. It sounds good for everybody, but it would be benefiting probably 40% of the people that are actually making some other money.
Right.
Okay. So that puts it into that pot of people that are, you could be still kind of low income, but you've got some other money coming in. You're not in poverty situation. You're
Right.
pretty
Right.
low above poverty, actually. So yeah, so that puts that tax cut competing with a lot of other things. Let's just put it that way. And so let's talk about the other things that it's competing with, because let's assume that we are going to have to pay some tax. Even back in the revolutionary times, you have to pay some tax, right? So if you have to pay some tax, and they'd love to get rid of income tax, I know, and probably replace it with a sales tax or a consumption tax. But let's think that that is quite remote, and it would just be hard to do to raise enough money. Okay, so let's talk about all the competing interests. First, there's estate tax. Okay, so one thing that people have been worried about, if we go to conferences and they're all like, oh, the estate tax is going to, the 12 million plus exemption per person is going to end in 2025. Oh, do something. I was like, you got to be kidding me. That's hard to change anyway. And both the Democrats and Republicans have had no appetite now, and there's a changing demographic too of like who's got the money and who they vote for. So I would think if I had to place a bet, I think it's a really safe bet that the estate tax will not go down. It'll stay at the 12 million. What are your thoughts?
Yeah, as you were describing that, one of the things that popped into my head, and it's something that I learned from you or that you reinforced for me, is this idea of here's all these proposals, right? Here are the talking points from the elections, even from the administration, as they take office. But it's important to be aware of the possibilities. Here are the things that are being talked about, and let's have a plan for when this comes to be. But let's not do anything until we know something is done, because of what you just described, that a lot of these things are hard to get through. And I think back 4.5 years ago, during our last presidential election, the campaign anyway was, Biden's position was changing the estate tax, right? Eliminating maybe the step up in basis when somebody dies. Some of these, some of these things. And there was a lot of conversation. You're great, the Democrats take over, and man, we've got to be scared about this. And I heard it from clients, I heard it from attorneys, and in part because of your expertise, I'm like, well, let's be prepared, but let's not jump off the ship into the lifeboat quite yet. And when's the last time you heard now, before this election cycle here, about the estate tax and about right? It was a big deal, and then it went away. Right. So be aware of it. And that I think is maybe going to be my overarching opinion about how to think about this stuff, is be aware, right? They're talking about changing Social Security tax. They're talking about these things. If it happens, usually when it happens, it's not retroactive. Not always. They can do whatever they want to, but usually they say, hey, starting next January, here's what's going to happen. Right. So we all usually have lead time. Again, not always, be careful of that. But when you have that to go, okay, once they decide what's going to happen and it becomes a law, then we can take some action on it. And we don't want to start from ground zero, but we also don't want to put the cart in front of the horse. And I think that's probably my overarching theme on this conversation.
Yeah, and the other thing I think we should talk about is capital gains. So right now, capital gains are taxed at 0 if you're in the lowest tax brackets. And then they're taxed at 15% if you're in middle tax brackets. Then they're taxed at 20% if you're in a higher tax bracket. And in that spot there between the middle and the high, there's a surtax that got put in during Obamacare to help pay for health insurance. Okay, so that can add another 3 or 4% to the people that are making, I think, over 250,000 if you're married filing jointly. Just saw this yesterday. Okay, so they'd like it just to be 15, call it a day. And probably assuming that on lower income people, maybe 0. That is one thing they will pass, and then that day it'll be effective, because they don't really want to be incentivizing the markets.
Yeah, right.
With, okay, it's going to be this, it's going to be that, and they'll keep it quiet too, so that there won't be a lot of you won't be able to trade based on changing tax brackets with capital gains. With the rest of it, I say I totally agree with you about how they handle it. It's like, okay, it's this date, we got time, don't worry about it. But with capital gains, they typically, it's like, okay, it's going into law now, and this is the day. Like, anything you sell after this day is at this tax bracket. Anything you sell before that day is that tax bracket. And the problem is that it's always like some odd day, and you have to try to keep track of it if you're a tax preparer.
Yeah.
Right, well, you sold that on the 1st of this same month, and then so that was taxed at 20%. But now if you sell it on the 20th of that month, that happened to be at 15%. So it gets kind of crazy and confusing. But that's another thing that I would that I remember from last time is a lot of last minute drama.
Yeah.
And it's frustrating as somebody who's talking about taxes, because then we need to try to get the word out at the very last minute about what you might be able to do at the end of the year. So that's kind of, or some of the stuff even happens the next year.
Right.
Proactively. And so you can't do anything. So that I'm expecting tax drama at the end of 2025 and probably at the end of 2026.
I think that's probably the safest bet, is expect some tax drama as we get to the end of next year, right, on things. And then, and again, I'm going to heed your advice over the years and pay attention, but don't get too excited until there's something to get excited about.
Yeah, and don't make moves based on proposals.
Yeah, that's great.
Yeah,
I think it's a great place to
get this stuff done.
Yeah, that's awesome.
They have to do a lot of trading. Anyway. All right.
Well, super. Hey, let's wrap things up here. Again, I'm John Shear. I run a fee-only financial planning practice in Middleton, Wisconsin.
I'm Bridget Sullivan-Mermel. I've got a fee-only financial planning practice in Chicago, Illinois. John and I are both taking clients, but if you're interested in finding an advisor who thinks like we do in your neighborhood, check out acplanners.org.
And don't forget, hit that subscribe button.